Hi, it's Catalina, the CEO of LoanSense. Today, coming to you from my lovely couch in sunny St. Petersburg, Florida. Today, I am talking to loan officers. The purpose of this video will be I want to do a borrower case study. I want to talk about our new pricing that loan officers have gotten very excited about, some updates and some product updates, as well as just talking about what can we help you do to prepare your borrowers to get kicked back into repayment in May? And what does that mean from a debt to income perspective for the home buying process? So first and foremost, I wanted to, we're going to have an updated lender calculator that connects to the consumer calculator you all can put on your website very, very soon. I'm very excited about that. So I did a demo a couple days ago, and on the call, a loan officer who's a branch manager of a major brand bought the annual subscription to our product right away. The annual subscription is just like 9 client enrollment credits, and I will talk about like what the product updates are around that as well. But basically, she got really excited because she said she wants to help serve more teachers, more public servants, and they come in with pretty significant amount of student loan debt. And so our products seem to be very meaningful and helpful for those borrowers. And she wasn't quite sure how we could boost purchasing power, but she wanted to learn. So I did a case study. She said she had a client that she's going to call Kevin, and she said he earned around $63,000 of loans. Of income, and he had about $121,000, something like 121,280, something like that, of student loans. And I said, okay, let's isolate the student loan piece and let's not put in any other forms of debt, just to make the case simpler. And I hope you all can see my screen. And because he had grad school debt, I assume the average is around 6.5%. She mentioned he was single, so I put family size of 1. We, of course, have advanced settings to allow LOs to change. I know interest rates have gone up a little, so let's just put 4.3%. And so 30-year fix, 65% DTI back-end ratio here. So I showed her that for her client, Kevin, that we could take him from a fully amortized student loan amount of around $1,300 closer to 366. I often get questions from loan officers like, how does what we do impact the borrower if they're in deferment versus like what do we do for the borrower? So if you're trying to qualify someone for Fannie and we're in deferment, you know that if they have $121,000 of student loans, you have to count $1,212, right? The 1%. If you want to try to qualify them for Freddie, then it would be about, $610. So regardless, we kick them into repayment and get them approximately this after amount of 366, which is less than the 0.5%, then you would qualify them even for Freddie. And we kick them into repayment so you can actually use that 366 and help them get the documentation from their loan servicer so you can advocate and help them through underwriting with 366 as their student loan amount. And as a result of changing 1377 to 366, we are boosting purchasing power from 143 to about 290K. That's significant. That's like doubling their purchasing power. That's more than doubling it in this person's case, right? If Kevin has been working for a school system, since he was a teacher, if he's been working for a school system, we can qualify all the payments he's already made towards loan forgiveness. That's another perk. And guess what? Kevin is going to thank you, the loan officer. They might remember us slightly, but they have the relationship with you and you first, and you're providing this pathway to affordability. So guess what? You as the loan officer now don't just compete on the rate, because everyone can compete on rate. You are competing on conditional pre-approval for a higher amount. Contingent pre-approval on a higher amount once they complete the student loan process. It takes about 21 days. So within the closed loan cycle, we can assist this borrower. There are circumstances we can in 21 days, just depending on their prior payment history, but we can let you know that as soon as we grab their student loan data. So how our product works is you invite your said client right here on the side. I don't know if you can see it. I'll move this over. You invite your client, and we invite them, and they come to the consumer-facing side of the platform. I'm not going to show the consumer-facing side of the platform, but it's very robust, and we help them enroll all their student loan paperwork to the Department of Education. Sometimes people ask, well, how do you get them a lower student loan payment? We get them a lower student loan payment. It's like a tax credit. We get it. We file paperwork into the Department of Education, and they just change loan plans. They don't change servicers. We're not like making a new loan. We're not doing any of that. We're just literally changing their monthly payment and getting them access to loan forgiveness programs. That is our core objective. We can even help them post-close, okay? So I bring that up because if you have 9 clients that you know you could boost their affordability, as our sales team likes to say, you help one and get 8 free, basically, because you help one and boost their purchasing power by this level. Let's say you make 150 basis points of the increased loan value. So let's say Kevin goes for the whole 147,000 of increased purchasing power, and you make 1.5%. You're boosting your purchasing power by about $2,000. That's just for the Kevin, and that would cover your entire annual cost for LoanSense. So we just launched like 8-9 credits for an annual subscription, in which case you don't pay setup or pay a monthly fee. You just literally buy 9 credits for the year. We assign you to an account rep who can help train you, can help answer questions, can help answer underwriting questions. If you're a Mortgage Coach customer, it maintains your integration. You also get access to our marketing program, which is quite amazing because we have all types of marketing material in there, from direct-to-consumer webinars to social media content, to add copy, to add images, all kinds of stuff. And so you get all that for the price of a discounted price of 9 credits. You get all of that. So it's pretty awesome. The link I will include in this email the link if you're interested in signing up. Of course, you're welcome to always come to our demo. We hold 3 demos a day now because our sales team is just amazing. We're getting so many demos scheduled. We welcome multiple LOs in each demo because we find that you all learn off of each other. So I'm really excited. We have a product update coming up, in which case we'll allow every loan officer to have a consumer tool, the LoanSense consumer tool on their website that will act as a lead capture. Super excited about that. That will be released soon, like in Q2 sometime. I don't know exact dates right now, but I'm super, super excited. If you have questions about how we can support you and your borrowers, feel free. I will also put a demo link in the description, demo and sign up link in the description. We also welcome LOs to always introduce us to their enterprise leaders, because we also do encompass loan turn down analysis to help your institution understand how many loans you lost in 2021 due to not adjusting student loan payments, right? We can adjust the payments and qualify more loans. In fact, we did this analysis for a major lender about 2 weeks ago, and we discovered that they lost $315 million of loan volume in 2021 from not adjusting the student loans. So the impact we can make is pretty significant. If you're interested in signing up as a loan officer or learning more, if you're marketing or C-suite executive of a lender, we always welcome conversations. So let us know if you have questions. We're on standby to assist. If you like this content, please subscribe to our channel. If you like it, and can't wait to be of service. Have a great day.